What is going on, guys? What is going on? Let me know if you can hear me. We're just waiting for the inflation data to come out. Market is reacting, not really. Still flat, almost at zero, almost an exact flat S&P 500 at the moment, waiting for inflation data.
Welcome back to Squawk Box right here on CNBC. We're just a few seconds away from that January CPI inflation number. You're looking right now at the futures, and ahead of this, you're seeing a little bit of optimism. Yesterday was a very strong day for the markets, and we're carrying through with the futures this morning. Dow right now up by about 97 points. S&P futures up by 13. The NASDAQ up by close to 50. The 10-year yield has been picking up over the last couple of weeks. If you check things out right now, especially over the last week or so, you'll see that the 10-year is...
So it's super interesting because the bond market, I think, is pricing in a little bit more uncertainty than the stock market.
Yes.
Let's see.
The January read on the Consumer Price Index, headline number expected to be up 0.5% delivers exactly that, up 0.5%. And we know that minus 0.1, originally released for December, was modified a week ago with benchmark revisions up 0.2, up 0.1%. So this was as expected. Now we strip out the all-important food and energy, also up exactly the expected amount of up 0.4. Now the big numbers, CPI year over year, and this number has been going down. It is 6.4%, 6.4%. This follows 5.7, and it is the fourth number in a row in this series to move lower. And if we look at the year-over-year core, we're expecting 5.5. It is higher at 5.6, but it is sequentially lower than the 5.7 in the rearview mirror, extending the run of seven from the, excuse me, on the core, this is 4 in a row at 5.6. 6.4 headline is 7 in a row, down from 9.1%. That was in June, and that was the 4-decade high. Now, here's the fly in the ointment why rates are going up. Even though the year-over-year numbers are each 1/10 lower than the rearview mirror, they are both a little higher than expectations. 6.4 was expected to be 6.2. 5.6 was expected to be 5.5. And here's the rub, okay? If you take X food and energy and then X shelter, that's now known as the super core. Now, I can't dig down into the data that deep, but many are doing that as we speak, because shelter last look in December, when we were up year over year 5.7%, was over 50% of that number. So super core is important because all of a sudden the Federal Reserve is very concerned about what's going on only with the core service sector. And that's what's left in the super core when you take out food, energy, and shelter. So rates have moved up, but not that much. We're at 370. We were right at 366, 367 pre-number. The pre-Dow futures are hovering just about at the same spot. And remember, if they go much over 34,407 and they're close, that would be the highest number going all the way back to January 17th on an intraday basis. So this number might be higher than expectations on year over year, but it's behaved on actual numbers, and the markets seem to be taking it in stride. Now, back to the panel.
All right,
So there you go, guys. If you guys didn't catch it, the CPI came in slightly higher than expected. I posted this in the Discord yesterday, but I was saying that the Cleveland Fed was expecting the CPI to be at 6.48%. And it did come in at 6.4. The expected was 6.2, so it came in slightly higher. We are seeing an initial reaction higher, but I do think that we will probably, I mean, who knows how these things go, because a lot of times we see delayed reactions, right? Like we don't see the negative price action until the following day or the following 2 days. But I did have this trend line drawn out, and it looks like at the moment we are taking liquidity here. And this trend line was, if you guys have been following the TA Tuesdays, TA Thursdays, or you've been following me on social media, by the way, follow me on social media for daily finance and trading content for free. This trend line we've been at since January 19th. and we convincingly broke below it last week. And I was saying that this could be, if CPI comes in higher than expected, this could be the end of the current rally, at least until the next data set drops, which we have FOMC in March. So it looks like this trend line right now is being respected. If I was trading at the moment, I would have taken a short here with a stop limit slightly above. It is, it is a relatively low risk short if you are doing it with futures. I don't know that I would play options today because of the potential for IV crush is just too high. So if I was trading this, I would trade this with just futures, shorting this liquidity run right here. And you could see from top to bottom, you would have made a good 20 points, which is about $1,000 per S&P 500 futures contract. But yeah, I mean, this trend line, I had drawn it really since we broke below it. Or I've had this trend line drawn for a while, but I paid attention to it since we convincingly broke below it, and broke market structure. So, market structure was continuing to make higher highs and higher lows. And then this yellow dotted line here is when we convincingly broke below market structure, going back up in a retracement to test highs again. And I do think that, especially due to the CPI numbers, which, if you guys are just joining us, CPI came in higher than expected, 6.4% year over year versus 6.2% year over year. So not great. I do think that is strong enough to at least put a dent in this rally. I don't know that the markets will really tank because of that. I mean, I don't know that it's significantly higher than expected, especially because let's dig down into the actual CPI report itself. Do they have it on Market Watch? No, maybe they do on CNBC. Let's dig down to the actual report itself and try to distill it and see, what are the specifics and what are the details besides just the year over year number, because the year over year number, not good that it came in higher than expected. It is still trending downward, so I don't want to say that it is trending up. Of course, a lot of you that track this stuff know that they did conveniently change their calculations very recently. And there's probably a reason for that. But as I tweeted yesterday, I said, it doesn't matter whether the numbers are fudged or not. All that matters is the number that they report. That's the only thing the market will care about. So I will get to your questions in a second. But the consumer price index rose 0.5% for the month, which translated to an annual gain of 6.4%. So I think the expectation was 0.4. So it came in 10 basis points higher than what was expected month over month. And here's the crazy thing is that, year over year inflation is going down because we did hit a peak last year, but inflation is still rising, right? This is the crazy part of the story is that I think people ignore the month over month number because the year over year number is going down. But what does it mean between December and January that inflation rose 0.5%? It means that inflation is still going up, even though the rate of inflation is slowing. And then excluding food and energy, so this is the core, which the Fed says that they like to look at more, increased 0.4%. The estimate was 0.3. So came in higher in the overall year-over-year CPI, came in higher in the month-over-month CPI, and came in higher in the core month-over-month CPI. So, and even came in higher in the year-over-year core, because we got 5.6%. And the estimates were 5.5%. So core came in 10 basis points higher, both in the month over month and the year over year. The story, really depends on how the market is going to interpret this. Yes, inflation is still going down from where it was, but, estimates coming in higher amidst this market rally is probably not great. And you see the reaction here, rejected at the trend line, exactly like we had suspected. As I was saying on my Twitter post not that long ago, I said, what is the reason that the markets are going to have to run if inflation comes in higher than expected? There has to be another reason. We had not earnings were not great, and guidance was pretty weak almost all across the board, at least as it relates to the mega caps, right? We had some of the Dow Jones stocks actually report pretty decent earnings and guidance, but in terms of the mega caps, the cream of the crop, not great earnings. We had Apple miss earnings for the first time, terribly miss earnings for the first time in forever. And we also had weak guidance all across the board. So, if inflation comes in higher than expected, what is left for this current market rally? Now, in terms of the broader perspective, I mean, yes, we've had a very nice bounce since October. But technically, as I said, if we fall back into the neckline of this inverse head and shoulders, and I'll draw it out for you again before taking your questions, if we fall below the neckline of this inverse head and shoulders, the inverse head and shoulders is the most reliable of all of the patterns, obviously in isolation, not taking into account other factors, right? It is the one that plays out the most. I think it has back tested, at least as it relates to the S&P 500, is an over 80% success rate, the head and shoulders and the inverse head and shoulders. So in this case, we have this inverse head and shoulders. You see where the neckline is, right? Now, we did break above it. However, we had a major data drop, which is obviously CPI. If we come back down here and break below this and fall back into the neckline, then not only do head and shoulders and inverse head and shoulders have a high success rate, but once a neckline is broken back into and the pattern fails, then that also has a high success rate. In this case, a high success rate of failure, right? So thank you, Anonymous, for donating $5 to St. Jude's. Appreciate you. All right, let's say what's up. Davey, Abstract, D, Mariano, Boris, Mario, what's going on? Regine, what's going on? Good morning. Lyle, Brian, Sedan, Soner, Volker, what's going on, guys? What is going on? CPI came in at 6.4%. CPI up, market doesn't care. Miguel, obviously, as always, a premature statement, like we always get with these things. What do you think about Palantir profitability? Good. They finally reported a profit after 2 decades. Good job. On the right track, I guess, but it's not. That is not my my cup of tea in terms of a company. We could talk about why that is, but good morning, Eddie. What's going on? Failure meaning what in reverse head and shoulders? Panda punch. I just said failure meaning if it falls back below the neckline, right? So yeah, let's take a look at the intraday move here. All right, so this right here was the CPI right before CPI, and then CPI dropped, and then market makers obviously running liquidity, dumping on all the FOMO buyers, and now we are seeing a muted move on the S&P futures. It's almost flat if you look at it on the daily, but if you look at it intraday, you could see that from top to bottom, this is actually a pretty significant move. From top to bottom, this is a 1.3% move, or negative 1.3% move. So, as I said, I do think that this is impetus enough to stop the current rally. I don't know that this is impetus enough to actually tank the market. So, if we do fall below this neckline in the inverse head and shoulders, then I am targeting 3,800 as a potential support level. But do we get back to October lows of 3,500? That's a tough one. I can honestly say I don't know. I do think if CPI came in significantly higher, then maybe. Now, if the inflation story changes from CPI came in higher than expected to CPI is actually rising year over year, meaning not declining, but we do see a month in which CPI rises more than the previous month. So this month we got 6.4%, right? If the next CPI reported in March for February comes in, say, at 6.8%, then I do think the market is going to tank, potentially match these lows, potentially take them out, right? So, yeah, good thing I'm in cash. Well, it depends. I mean, if you if you saw my last video, I sold a lot of my stocks. What was it, Thursday or Friday of last week? Those of you that have been watching the videos remember I sold it. Thursday, Friday of last week, and not because I thought that there was a top, but simply because we ran up really nicely in the face of uncertainty. So, if I'm up 100% on Tesla, I don't really want to give up those gains in the face of uncertainty. It could continue to go up, but in my mind, it was a risk reward or a cost benefit analysis, right? It's like, how much more is it going to go up in the short term? If Tesla's up 100% in 3 to 4 weeks, how much more is it going to run? And am I willing to risk the 100% gain in Tesla for another 10%, for another 15%, versus the potential downside of missing CPI and then dropping, right? So, yeah. What is the number on the neckline? Cipri says the number on the neckline was, the number on the neckline is diagonal, right? The neckline is not straight. You can see it here. This right here is the neckline. So it really depends on the day, right? But that is the neckline. And you can use the head and shoulders tool here in TradingView. But yeah. All right. Can I get a recession discount on the Academy? Well, we're not in a recession yet, so no. Can you please make the lines a bit thicker and color more visible? Lauren, sure, but pull up TradingView and start drawing it out for yourself. Here. Better? This looks ugly as shit. All right. I bought some QQQ SPY puts yesterday. Deepak, let's talk about this. What is the expiration? And the reason I ask is because the implied volatility, if you bought them for this Friday's expiration, or even worse, if you bought them for this Wednesday's expiration, you are likely going to lose money on those because you will get IV crushed. The further out you go, the less likely you will get IV crushed, right? Because the options that expire the soonest have the highest implied volatility, especially around binary events. And so if the market doesn't make the move, the expected move, in this case, the S&P is only up 0.08%, meaning very flat. Those right now are getting IV crushed because the binary event already happened, right? The actual CPI numbers were released. So now you see a huge crush in IV. And if you guys want me to show you what that looks like, I can pull up an options chain and show you real quick. But let me go through your questions. 24th, next Friday. Okay, not so bad, honestly. Good morning, Z. What's up, Joel? Somebody donated $100, and I don't want to let it go by without recognition. Jonas Pond, appreciate you, my man. Thank you so much. $100 donation to St. Jude's. Thank you. If you have a question, let me know. I'll be happy to answer it in priority. Vote Trend, $20 to St. Jude's. Appreciate you, Vote Trend. Thank you so much. James Magic, hello. What's going on? Portito, how you going? How you doing, man? What's going on? All this reduction in CPI, but when do I see that? Everything is still the same here in Miami. Yeah, I mean, we have to drill down, and we could do that soon, on this call, but we have to drill down into the CPI and look at what each sector did, because some sectors will be up. I think core services might be up. I think transportation might be up. Rent, there might not have been a major dent in rents or housing, but other things are going down. Obviously, oil or gas in the US, in California at least, if you remember, just a few months ago was over $7 a gallon. and now we have gas hovering at around $4, depending on where you are in California. So, it's it really depends on the sector. But I know that is a common frustration because most Americans are at the grocery stores, are looking at their um, looking at their bank statements, they're looking at their energy bills, they're looking at their if you took out a mortgage recently, are looking at their mortgages, and they're like, shit's getting super expensive. Where is inflation going down? Things are still expensive. I'm still needing to make decisions between between eggs and filling my gas tank. Um, okay, so here I'm gonna show you something real quick in the options chain. Okay, if you take a look at an options chain, right? Um, if you take a look at an options chain, you will see that because the expected move wasn't made, um, again, I mean, we've had less than 0.5% of a move up and down in the S&P 500. So right now, the S&P 500 is green. But if you take a look at the options, both sides have lost money. These right here are ES options, right? They're based on S&P 500 futures. But if you look at both sides, all red. Look at this side, percent change, all red. That is because implied volatility tanked. And implied volatility tanked because the expected move wasn't made. And so when the expected move isn't made, even if the stock or the underlying moves in the direction that you suspected, so in this case, if you bought calls, for instance, because right now the S&P is slightly green, even though I don't suspect that it will stay like that, in the next couple of days, I could be wrong. You will still lose money on the short dated options because the short dated options have had the highest IV, and then after the binary event is reported, that IV tends to tank. So there you go. All right. Thoughts on Tesla. Fernando, ask a more specific question, please. I don't know what thoughts you want me to deliver. Palantir is a mysterious company. What are they doing? Nobody knows. Yeah, I do think that Palantir, is what they do is not relatively straightforward. And I do think that there are, that there is a lot of online hype because so many videos have been made about Palantir by some pretty big YouTubers. But in general, I think people bought a lot of it without knowing exactly what they do. As it relates to cybersecurity and defense contracts, etc. Their software is very proprietary, and that is part of the reason why they've had trouble really scaling, and they've had trouble really turning a profit. Although this last earnings, it looks like they actually turned a profit. So yeah, I don't know why people get excited about a cybersecurity or defense company that could be responsible for spying on American individuals. But hey, to each their own, I guess. I do think honestly that it's just because of influencers talking about it and then parroting each other. Let me look at the S&P 500 real quick because I might want to take a trade here. I would have taken. Let me see. Yeah, it's still rather flat. Like I don't mind a short here on the futures with a tight stop limit. I think that you can easily justify one relatively safely, honestly. Not very distinct Head and Shoulders. I don't know how you could say that. This is clear as day. This is a textbook pattern. Like if you opened up a textbook and looked at inverse Head and Shoulders, you wouldn't find a better pattern than this. And this exists in the wild. It's not even in a textbook. So yeah. Is this something calming on both sides? Not sure what that means, Sashin, honestly. Um, Tom Nash. Hey, man, long time. Good job on bringing the news to the table. As always, love your style. Let's collab soon. Yeah, let's do it, bro. Let's do it. I see the check mark, so I think that is the real Tom Nash and not a bot, because I'm sure that we both have bots. Jonas Pond. Hi, Tom. I love your channel. Yeah, check out Tom Nash's channel. Donations are a class act. I appreciate you, man. All right, let's see. So Z, is this something calming on both sides? Oh, yeah, let me know what you mean, Sashin. Do you think CPI is a scam, Mr. Nice Guy? I do think the way that CPI is reported could be a scam, yeah, but as I said in my tweet, it doesn't matter whether the numbers are like what does it change materially on the ground for you as a trader or investor, right? Like, yes, it sucks for the average American that, you know, it's when they report CPI is going down, but we're not seeing it materially at the grocery store or whatever. But in terms of um in terms of what, you know, how it relates to your trading or investing, all that matters is the number that's reported, right? Pitbull Love, be nice to our guests, man. Be nice to our guests. Question: if CPI came down, does that mean that unemployment has to only double and will be safe against hyperinflation? Well, it's a race between CPI, the Fed funds rate, and unemployment, right? So if the Fed's hope is that CPI can come down drastically before unemployment ticks up significantly, and before the Fed funds rate has to go up significantly. Is that an M shirt, Christopher? Yes, it's an M shirt. Good catch. Do you ever run calendar spreads? Yes, we run calendars, double butterflies, etc. Hey Tom, let me know how to get a hold of you, bro. And we'll do a live stream together if you're still on. Or if anybody knows how to get a hold of Tom, let me know. Or I could just hit him up on Twitter. Let me see if he's still on. Z, are you a Dodgers fan? Yeah, I'm from LA, bro. Of course. Only M shirt is University of Michigan. How much the CPI will affect the? Okay, this is actually a great question, Mark Warner. Okay, let's look at the Fed Watch tool. This is such a good question because I forgot to check on how this changed the bets on the Fed funds rate. So as of yesterday, a 50 basis point rate hike was priced in at around 10% probability. It was a little shy of 10%, right? Right now, this dropped right after the CPI was released. So I think this number would have stayed at 10% or even gone higher if the CPI came in significantly higher, right? In this case, the CPI came in slightly lower, or not slightly lower, came in slightly higher than expected, and we're seeing this number drop. So I think that right now, 25 basis points in the March meeting is the likeliest hike. And me personally, I think they will pause after March. I don't think the Fed is going to hike after March. And that would take us to right around the 5% rate. So they usually quote it in a range. So that we would be between 475 basis points and 500 basis points, meaning between 4.75 and 5%. And I do think at that point, the Fed will pause and just keep the rates there, hoping that inflation will continue to drop and unemployment will slightly tick up, and hoping that they don't have to raise them higher than 5%. That is my estimation. And part of the reason is because of the fact that the Fed funds rate is now higher than the 2-year Treasury rate. And when that happens, we've seen a pause every single time, right? All right. What is all about UFOs in the US? Yes. Now, I'll be honest, with regards to UFOs, that shit is really exciting to me. I don't want Chinese air balloons floating in our airspace, but hopefully they are actually UFOs and not not Chinese balloons trying to spy on us. Because if it was UFOs, yeah, of course, that is super exciting. Who doesn't want that? Let me look at what the Fed funds rate. Federal funds effective rate. Here we go. So we are at 4.33%. If we hike another 25 basis points, we will get to around just shy of that 5%. And I do think the Fed will stop there. And if let's see, if we can let's add a line. Let's go 2-year Treasury. 2-year constant maturity quoted on an investment basis. Yes, add data series. This is the line we want. Okay, check this out. So if we zoom in here, you could see that the 2-year Treasury fell below the Fed funds rate, and now it is slightly ticking. It's hovering right around there, right? But if we look at it, it's slightly below. It was slightly below. It was 4.06, while the Fed funds rate was 4.33. And now it is slightly higher, the last quotation at 4.5, okay? But if you look at what happens every single time that the Fed funds rate, every single time that the Fed funds rate gets above the 2-year Treasury, the Fed pauses the Fed funds rate, which is this line in blue, right? Let me get this. The Fed pauses the Fed funds rate, which is this line in blue, and holds it there, right? So you can see this in the year 2000. You can see this in 2008. You can even see this in right before the pandemic in 2019. So we are here again. I think that regardless of what Jerome Powell said, the Fed is going to pause after next meeting because of this, right? The thing is, the Fed funds rate is an overnight rate. That is the rate at which banks borrow from each other, right? The 2-year Treasury, if the 2-year Treasury is below the overnight rate, that means banks can get more by lending to each other overnight than they can by buying 2-year Treasuries in the bond market, right? So because Treasury liquidity is the most important thing for the US dollar and the most important thing for the US government, the Fed cannot contribute to Treasury liquidity running the risk of Treasury liquidity going dry. So I know it's a bit complicated, but yeah. Let's see what the intraday move looks like. Yeah, I honestly think that the day is long. The market isn't even open yet. So let's consider that. We're here live streaming. CPI was reported at 5:30, but the market is not even open yet. I think when the market opens, like I said, you could have shorted this at the top of this liquidity run or somewhere in this liquidity run with a tight stop limit. But we'll see how the market reacts when it opens. A lot of times we do tend to see more liquidity runs because market makers and institutions know that there are more participants in the market when the market opens, right? Like who's trading pre-market besides degenerates like us, right? But most market participants and retail traders will only trade when the market opens. And so when 9:30 hits, 9:30 New York time hits, um, you often do see market makers messing around with the price or helping the price to go one way so that they take liquidity only to reverse it the other way, right? So I wouldn't be surprised, honestly, when 6:30 or 9:30 a.m. hits to see a little bit more of a liquidity run before banks take it the other way. Train by day, Joe Rogan podcast all night. Oh, yeah. You're talking about aliens? Yeah. Not sure the market really knows how to respond to the CPI. Gunmetal. Yeah, I mean, this happens every single data drop, right? Or major data drop. But also remember that unlike FOMC, CPI is released pre-market, whereas FOMC is released midday. So, we don't have the bulk of market participants in yet, right? Tamir Mori, drinking coffee out of my TT mug. Nice, man. Post it on Twitter or Instagram and tag me in it, bro. We'll be more interested when Tom and Z sharing different perspectives on Palantir. Yeah, I'm sure we'll talk about it, Carl. I'm sure we'll talk about it. I mean, I think that's how we initially got on each other's radar. I want to say last year. Fuck, time passes by so much. It could be the year before. Honestly, that's how long it could be before since I did that Palantir video. But yeah, we could talk Palantir, but I'm sure we'll talk about a bunch of other things too. Z, do you think CPI will be revised in coming weeks and the Fed will clarify if the revised numbers go up? No, I think what you see today is the data that is going to be used. Yeah. What do you think crashed sooner or later 2024? I personally don't think that there's an impetus for a major crash besides, from here, besides inflation creeping back up, right? So like kind of like the scenario that Michael Burry had outlined, where you have inflation returning, which is everybody's fear, right? It's like the boogeyman, because we have in the U.S. at least we have a history of that happening, where we thought we had defeated the inflation beast, and then inflation came back roaring and completely wrecked the U.S. economy. Obviously, I'm talking about here in the 80s. So that fear is very real, and I do think that if there are signs that inflation is roaring back, like I said, the minute that we get a CPI that's significantly higher than the previous month, that narrative is going to start to kick in. Because right now the narrative is soft landing, soft landing, soft landing, meaning that we can actually tamp down inflation without wrecking the economy, because so far the economy is not wrecked, at least as it relates to unemployment and spending, right? But you do see muted guidance from all the mega caps. So the minute that that inflation ticks back higher than a previous month, I do think that is impetus for a bigger crash. Like I said, right now, it's tough to see how the market will digest this. We did come in, slightly higher than expected. Although the inflation year-over-year rate is still dropping. I think this is the 6th time in a row that it has dropped from the previous month. 3,800 is a level that I could see the S&P going to if the market digests this negatively. But a real crash, I don't think will happen until CPI comes in higher than a previous month, and or unemployment starts ticking up so much that it starts to affect earnings and forward earnings extremely negatively, right? We know that's not true. Not sure what you're talking about, Joe. Clarify, please. How long do you think hedge funds will keep supporting poor earnings? I do think that you will probably, if it's my estimation, I do think that this could be the peak of this run here. Like, I don't think that the market will continue higher based on just the CPI report. Now, if Jerome Powell comes in March and does pause, I do think you'll see an initial run higher from the pause, right? Like there will be euphoria around the pause itself, but that will also be short-lived until we do get a CPI report that's higher than the previous month. But I could easily see this rally, dropping back down below 4,000 on the S&P 500. I could see that. Have you ever used TrendSpider? No, but I've seen it on Twitter. For me, it's not something that would help me. I do like TradingView. I've been using TradingView for years. It has all the tools that I need, and I like drawing out my own trends. But I could see how it could help some people. Sure. Are bonds getting attractive? Unix Linux, nice name, but bonds have been attractive. What are you talking about? Where can you get? Look at the 3-month yield, right? Let's look at the 3-month yield. I mean, fuck the 3-month. Look at the 1-month yield. You get a 1-month bond at 4.6%, or a 1-month treasury of 4.6%. You can get a 4-month treasury of 4.8. You can get a 6-month treasury of 5. Where are you going to get this? You can get a 3-month treasury of 4.8, right? Of course, bonds are attractive, especially if you're the type that's like, I'm going to set aside and sit aside in cash. Well, at least get some yield back, right? Like if you have a bunch of cash and you're like, I'm waiting for this market to actually subside, or for this rally to actually subside. Even though, if you guys have been following the Academy, shout out to the Academy, I did say that October, you could not ignore that opportunity. And not because I thought that was the bottom, but because we were at a point where we were at a 50% retracement of the previous bull market. So this previous bull market here, right? We were at a 50% retracement from the previous bull market. And historically, that is a key moment to invest, regardless of if this is the bottom or not. So if you take a look at my analysis from back then, and by the way, if you guys want access to the Academy, link is in the description below. Be sure to join us if you want access to all of my analysis, our plays, intraday, futures, options, swings, long-term holds, shorts, etc. But this is what I said back in October. Where is it? I'll show you what I said. October 4th. As I've stated before, there's a good time to sell cash or puts in DCA and blue chips. If you have a long-term horizon, trying to time the bottom is useless. Erase that from your mind. Instead, focus on the discount you're getting on a blue chip that you've been waiting to own. Right? So, and then I said, don't let anybody ridicule you for accumulating in a bear market for the long term. The sheep pat themselves on the back for buying tops in a bull market. Buying at these levels is not obvious to most retail investors, so they resort to ridiculing or fear mongering, right? That's what I said on October 4th. And then, again, on October 18th, I said we are at a 50% retracement level from the previous bull market, which is historically a good time to add stocks for the long term. As we've discussed before, on October 4th, I would only look at blue chips and indexes here, right? So yeah, it's I didn't think that was the bottom, but 50% retracement of the previous bull market, give me that any time of the day. And if you want access to all of this live analysis, link is in the description. So we are getting close to market open here. And we are seeing kind of a, I guess, a more decisive move on the red side of the S&P 500, still down only 0.3%. I do think by the time the day is over, this will be a bigger move. I don't think we're going to hover around here because, we did come in higher than expected. Let me get to your questions. I just don't see interest rates dropping when we are printing so much and send so much to Ukraine. Joe, this sounds like just anecdote, man. It sounds like angry anecdote. I've seen this time and time again in the markets, right? Focus on data and focus on the data that the important people are tracking. It doesn't matter what you or I think, right? Know that. I mean, if you are talking as if you're just trying to keep a historical record of grievances against the government or against the central banks, that's one thing. But if you are trying to invest or trade, it doesn't matter what you think. It matters what they think, right? So don't be stubborn about what your thoughts are regarding interest rates or funds to Ukraine or whatever. It only matters what the central banks think. It only matters what the government thinks. And you base your investments and your decisions based off of that data. You don't base it off of, how wrong you think the reported numbers are. So just a word of advice or caution, I guess. Can you explain when JEPI is a better investment than the S&P 500? Yeah, this is a good question. So JEPI is an ETF that I actually put on your guys' radar, or a lot of you. It is a low volatility, high dividend paying ETF that pays a dividend every month. The yield right now is between 12 and 13%, which is amazing. It only tracks the S&P 500, right? But it also actively sells covered calls against S&P 500 stocks. So you are not going to see, if the S&P 500 makes a huge move up, JEPI will make a less of a move up. It will still go up, but it will make less of a move up because it is low volatility. So it is consistently holding hedges as well as long positions, okay? But same on the flip side. If the S&P tanks, JEPI makes less of a move down. So you are basically holding this because it's lower volatility. You're still in the S&P 500, but you're also getting a 12% dividend. So I can't tell you when it is better for you. You only have to determine that, whether the 12% guaranteed in dividends paid monthly is a better draw for you at the moment than staying invested directly in the S&P 500 with no hedges, right? So JEPI is basically an S&P 500 ETF with hedges in the form of covered calls. And you can Google this and look at JEPI if you want. So right now you see JEPI is flat, while the SPY, I think, is down 0.3% at the moment. Yeah, the SPY is down over a full dollar and some. But so make a determination how much you'd want to put straight up in the S&P 500 and how much you'd want to put in JEPI. For me, if times are uncertain, and I do think, say for instance, my projection is that this run is over and the S&P 500 is going to start dropping to below 4,000 because the CPI came in slightly higher than expected, then I think JEPI is a better call than the SPY. But, I don't think it's either or. I still think that in the long run, you do want to be in the S&P 500, right? Stay invested in the S&P 500, right? Do you think you can look at Palantir earnings? In terms of what? You have the earnings, James. You have it in front of you. What do you want me to look at that you don't have access to? Would you be buying into options now with the high volatility? That's too general of a question. What options? What expiration? What am I buying? How far out would you buy a 380 SPY put? I personally wouldn't buy a 380 SPY put. That's up to you. That's too far out of the money for me. The SPY is at 412. Why would you buy something that's so out of the money? If 380 is your target, it doesn't mean that that's the put you have to buy. I think this is a mistake that newbies make. right? Because if we get near expiration and the SPY is not at 380, that option is going to be worth $0 exactly. So I don't know why you'd buy a 380 put on the SPY. Unless you think a big move is coming, right? So if you bought a 380 SPY put and the SPY dropped to say 395 in the next 2 days, then that 380 SPY put will make money as long as you have, at least a week or two or more left to expiration. But if you bought a 380 SPY put and the SPY hasn't made a big move yet, and you are getting near expiration and we are not at 380 or nowhere near 380, that put will be worth $0. So even if you think the SPY might go to 380, go closer to the money. Don't just buy a 380 put because it's cheap. You're throwing money in the trash. Any opinions about Boyle? What about it? Ask a more specific question as it relates to Boyle. If I'm looking into bond ETF, any recommendation? I think one of the most liquid ones is TLT. And it pays a dividend. But remember that the bond ETFs go up when the rates go down. So I do think that between now and March is potentially a good time to start buying bond ETFs. And as I said, I'm going to probably be doing a play on bond futures because the 2-year treasury, which is the one that's more closely tied to the Fed funds rate, that's the one that is affected directly by the interest rate hikes or cuts that the Fed does, right? But I do think that once the Fed pauses, that is a moment, for me at least, to go long on bond ETFs and bond futures. And if you want the real-time plays and you want to get alerted for that, better join the Academy, because I think that is going to be one of the easiest plays to make, even easier than stocks, is the bond market as it relates to what's going on with the rates, right? So click that link in the description and join us. And we are doing a mastermind this weekend as well. So if you don't want to miss out the mastermind, then click that link in the description. The masterminds are amazing. We go over a different array of topics each month as it relates to futures and options, and really try and demystify it for you guys. Do you do live stream technical analysis in your Discord? Yeah, we do masterminds every month. Do you call out swings in your Discord? Yes, all of our swings and scalps are right here. Here are all the scalps. And our day trades, and our stock alerts, and our options and futures alerts. And the futures trade that I called out yesterday, which was up $600 per contract. Yeah, so if you want access to all of that, click it, son. SPY 320 incoming. I mean, these are just SPY 460 incoming. I mean, this is hyperbole, guys. Be realistic. Are yields inversely tied to equities and bonds? No, yields are bonds. Yields are bonds. Inversely tied to equities? No. There are times when one takes liquidity from the other. But in general, bonds and equities are invested into at the same time. Now, when there are major dislocations, there are times when bonds are less liquid than equities, and vice versa, right? What do you think about Tesla right now and the speech we'll be doing in a few weeks? Do you think it's valued high enough, or do you think it'll still go up and down? Tesla is going to go up and down all the time. So not sure what you mean, Drax. Love the Academy. Appreciate you, Jonathan Bridgewater. In your opinion, what do you think would have less risk on the SPY today? Call credit spreads or puts? No, you don't want to trade puts today, bro. You are going to get IV crushed. Spreads, better. Futures, best. What, 35K, the price of the Academy? No, King of Dreams. Stop trolling or I will put you in timeout. What do you think about ticker Wish? What do I think about it? It's a shit stock, of course, with a lot of eyeballs, because I think it was one of the stocks that was pumped by, what was it, Atlas, I guess? Zach Morris and those guys. Oil is at a pretty low price. Natural gas should go up eventually. Yes, but bro, you're dealing with a leveraged ETF, right? Which will suffer from volatility decay, right? So you don't want to be holding something like this. Leverage ETFs are made for short-term plays, whether you're talking about, SOXS, SOXL, Boyle, TQQQ, SQQQ. Those are made for short-term moves. If you held Boyle, good freaking luck, okay? Good freaking luck. If you happen to catch an upswing, then you got lucky. But if you held Boyle thinking, oh, natural gas has to go up soon, well, good job. You lost 90% of your money in the span of a couple of months. You don't hold Boyle. The reason that people are enamored is because Boyle, hit $140 and it's currently trading at $6. And so they have dreams of buying at $6 and it going to 140. That's not how leverage ETFs work. Do you have leaps right now? Absolutely not. This is the time to fade. This is not the time to buy. Thank you for your daily videos and sharing important information. Thank you. Appreciate you. Thank you, Ravi. Thank you so much. How do you like I-bonds? I like them when they were paying over 9%. Right now, not great, especially since you're capped. You're capped at 10 grand. Look at, like I said, look at on a 1 month bond, a 1 month treasury, you get 4.6, bro. 1 month. Is it safe to hold a leverage bond ETF? I just talked about leverage ETFs. Safe? Do you think, okay, common sense, do you think leverage ETFs are safe? If you're asking, then it's probably a bad idea, right? And Williams Beats, what's going on, bro? Francisco Lopez, how's Mexico? Amazing. I was in Oaxaca, which is great. Not a lot of people, not a lot of tourists visit there, so that's a good part. If you want to avoid, Cabo San Lucas, if you want to avoid Cancun, Oaxaca is where it's at. I won't tell you where in Oaxaca, though, because I don't want all y'all showing up and it becoming a tourist spot. 3 month treasuries are sick right now. Yeah, 1 month, 2 month, 3 month. What do you mean by this is the time to fade? Javier asks. Fading the market is doing exact opposite of what the dumb money are doing. So right now, who do you think is buying here? Smart money or dumb money? Probably dumb money, right? Smart money was buying here, maybe it was buying here, maybe it was buying here. But fading the market means not deciding, like when everybody's deciding to buy here, I'm selling my stocks, right? Because I accumulated stocks at the 50% retracement off of the last bull market. So I'm looking to offload them on people here who are like, yes, the bull market is here. Time to buy, right? In my view, this is not the time to buy. I would hate buying here. It would scare me. Party at Z's place this Friday. I went to Oaxaca in 2010. Dope mole. Yes. Mole and the other national dishes, tlayuda, which is amazing. Fade like Z's haircut. Yes. I do have a fade right now, actually. I hold zero boil. cool. It's not a hold, right? If you are in on the geopolitical story as it relates to natural gas, then awesome. But I wouldn't hold that. I wouldn't hold that stock, honestly. If we break this here on the 15-minute, this right here, if we break this line here on the 15-minute, which market opens in 1 minute. If we break this line here on the 15-minute, I would consider entering another short. I shorted yesterday and closed it before CPI this morning, but I would consider entering another short. Now, what you really want to see if you're a prudent trader is you want to see this break and then retest, and that's when you'd want to enter your short, right? So whether you're using the EMAs, right? A lot of people use the EMA crossovers. A lot of people use VWAP, or you can even use something like the Fibonacci retracement, right? See, now the market is pricing in what has happened with CPI. But depending on how far down this goes, you could use the Fibonacci retracement as well to time your entries. And then obviously fair value gaps. There's so many things you can use for a retracement. But, you could have either played this move down, breaking out of here, or you hope and wait that there's a retracement back up here before taking it short again, right? Which is what most prudent traders would do unless you are a strict breakout trader. Bro, have to be patient with us. I am patient with you. I answer all of your questions. I'm just saying be more specific. Like some people will be like, what do you think about Palantir? It's like there's so many aspects that I can maybe provide commentary on. I'm not going to give you, a thoughts question. Thanks, man, for your or a thoughts answer. Thanks, man, for your time and effort making this video. Appreciate you guys. Thank you guys for joining me. What time period is your definition of hold? Like overnight. It really depends. It really depends. Like Boyle, I would not hold. SOXL, SOXS, I don't mind holding for a few days to see if the move that I want is being made. Where is the soundtrack of your intro from? I don't know, some old beat that I made, I guess. I'd like to trade full time. I need my 9 to 5 for the income, so maybe one day I'll have the time to join the academy. Hopefully we don't scare you off with the crazy question. No, you're not scaring me off. It's just like I can't answer. I can't answer two really general questions. Like, for the sake of everybody's time, and for our edification, yours and mine, I would appreciate more specific questions. That way, we're getting the most out of it. Thanks again for taking the time to educate and explain things. Appreciate you. All right. Appreciate you always flexing. Thank you for that comment. So, yeah, as I said, in this case, you're wanting to, if you're a straight breakout trader, in which case you would likely be scalping this move here, and in which case you probably already took profit on this 15-point move on the S&P 500 futures. Let's see what's on our watch list today. Shout out to the analysts in the academy. QQQ, SPY, Apple, Microsoft, Tesla. This is the options day trade watch list. And then we just got a breakdown of CPI. Shout out to Dr. Cortex, one of our analysts. So here's the breakdown by industry, right? Overall CPI, core CPI, we talked about that. So gasoline is actually up 1.5%. Fuel oil up 27.7%. That's crazy. Gasoline utilities 26.7. Electricity up 11.9. So how the fuck did inflation go down? Food at home 11.3%. Food away from home 8.2%. Shelter plus 7.9%. Medical care plus 3%. So really, used cars were the only thing that had a major decrease, 11.6% down. That's crazy. Yeah, the CPI report looks terrible once you drill down into the numbers. Thanks for all you do. This is a great channel, one of the few. Appreciate you, Martin D. Thank you so much. Market opened up and smashed through your line. Yeah. Z visiting El Chapo trade station. Can you link the Discord? Yes, it's the link, the first link in the description, the Academy link. Book a call with one of the ambassadors. Used car seems messed up. It's rising. No, used cars is the only thing that's dropping. So this is, you know, the move from here. Again, if you were a scalper, you caught this move. You would play the straight breakouts, which is fine as long as your risk management is on point. But in this case, you would wait for a retracement back, you know, into a key level, and you would fumble around with different time frames in order to ascertain what that key level is, right? So this isn't necessarily a fair value gap if you are a strict ICT trader, but if you follow the likes of Al Brooks, this gap here is still a significant imbalance, right? And you could take a trade off of this gap here. Again, not following ICT rules, but following other methodologies. It really is all about, when you're entering and exiting, it really is all about risk management, right? It's not about taking random trades. So I don't care what you use, what methodology you use for your trades, as long as you have at least more than two or more points of confluence for taking the trade, and your risk management is on point, right? Used cars went up month over month according to Manheim, but year over year they're down 11.6. Yeah, we're talking about the year over year numbers. What is the difference between the Academy and the monthly subscription? There is no monthly subscription anymore. So the only way to enter the Academy is either yearly or lifetime, but you also get access to all of the courses and you get access to all of the Zoom calls that I do on a monthly basis. And we're having one this weekend. So if you don't want to miss out on our mastermind this weekend, where I will give you guys a lesson, everything related to options and futures and technical analysis, click the link in the description. Join us before that mastermind comes out. How do you short the market without buying puts? Futures, put spreads, credit call spreads, outright shorts, inverse ETFs. There's so many. People like you guys are the reason the markets are divorced from fundamentals now. Just zooming in on the charts and living in la la land waiting for the next dip. So why are you on this channel, TYD? and people like us are the reason that people have the opportunity to break free from a 9-to-5 rat race and make money, right? But why are you on a trading channel? That's you're wasting your time. Is that a good use of your time if you don't agree with trading, but you are sitting on a trading channel? No, go do something else, bro. Get better with your life. Make better use of your time. If this is not for you, I don't care. To each their own. Thank you, Z. Hearing your analysis on days like this is really enlightening. Appreciate you, Dario. How much is the Discord annually? Javier, just book a call with the ambassador. Go through that process. Boot him. Nah, no need to boot him, Marcus. If he wants to waste his time, let him waste his time. Don't get Z hot. No, it's just funny, right? Like Like, what were for those of you that had strict dads at home, like what would your dad think about you, or your older brother, or your uncles, or your mom? What would they think about you if you're sitting there wasting your time, right? Like, if you're not into trading, but you're coming to a trading channel to talk shit, what does that say about you? Go do something useful. It's early, bro. You still got time to do something useful with your time, dude. Go do something useful. What budget did you start trading with? Well, as I said before, when you are starting out trading, your best tool is your 9 to 5, because that is the tool that allows you to keep bringing in income, right? Taking a fixed amount and trying to trade with that, you are not going to be successful. This is not, this is not the lottery. This is not online poker. If you just take a fixed amount and you're like, I want to turn this into $1 million, that's not going to work, right? You need to be able to have the confidence by bringing in money every single month and knowing that you are not going to run out of money, right? So that is why I say that your 9 to 5 is one of your best tools, because if you're dealing with a fixed pot, bro, if you're dealing with a fixed pot, right? You are going to be worried about that pot. And anytime that pot starts dwindling down, right? Like, say you started with 5 G's and that pot starts dwindling down, you are going to be so worried about that 5 G's. You are not going to trade with liberty. You're going to be making terrible decisions. So you definitely want to have the comfort knowing, you know what, I will finish my thought in a second, but I'm just looking at this price action because I really would rather enter at a retracement into this zone here, right, and deal with these imbalances than try to trade this simp ass retracement, this small ass retracement here. I really would love to retrace back to VWAP, or maybe back to the 21 EMA, which is the green line on this chart, and address like all of this here. I don't want this small ass retracement. But if you have a small pot and you're so worried about it, you're not going to make good decisions, right? You're not going to make good decisions. 1 second. Let me see if I can get this off. More. If we can get to this level here, I would take it short with a small stop limit. Even though it looks like we potentially took sell side liquidity for the interim. I would still short this because we broke below this. I would still short this and hope by end of day we get to 4,100. That would be a nice move. If we can get back to this level here, somewhere around here, I would take a short, set a stop limit slightly above, right? Not that, maybe 10 points above, and hope to ride it down to at least this level here. So hopefully we get more of a retracement up. All right. I'm not a trader, but Z's knowledge on the market movement is invaluable. Appreciate you, Tristan. He can use this time and mop the toilet. He's talking about TYD. Yeah, TYD, go mop the toilet, bro. Lowry 3. These numbers are delayed. Used car prices are back on the rise. Lowry 3, those are year-over-year numbers. So they could be up month-over-month, but down year-over-year, if that makes sense. The market is never about fundamentals anyways. Yeah, I mean, Miguel, you can make that argument. You can make that argument after the advent of electronic trading, which, funny enough, Bernie Madoff was one of the fathers of electronic trading, right? He created basically the NASDAQ. So, Z, my XOM 100 call got exercised. Do I need to manually exercise? Oh, it got assigned. Yeah, you can exercise the 115, but what is ZOM currently trading at? Because you can potentially close out your position for cheaper if it's trading below 115. Well, it isn't. So you can either wait because you still have time, right? You have until Friday. And if ZOM gets below 115, then it's cheaper to actually buy the shares on the open market than it is exercising the 115, right? Because why would you exercise the 115 if ZOM is trading at 112? Then you can close out your position for $3 less, right? Hopefully that makes sense. Let's monitor this. Ooh, like I said, baby, we getting the retracement. I want it to come up to at least 4140. If we can get to 4140, I will be entertaining a short. Even if it doesn't work out, it's still more optimal. Let's see if I can spot anything on the other time frames. Oof. Yeah, just a tiny gap there on the 15-minute. What about the 1 minute? Or no, actually, let's go to the 2 minute. Less noise. 41.3750, 41.3775. Okay. We are near VWAP. I don't mind taking it short here with a stop limit slightly above. Let's see. Let's see what happens here at VWAP, which is the purple line. Again, this is not an A+ trade because it looks like we did take out liquidity here and maybe back on the rise to take liquidity out here before down. But in terms of risk to reward, it's not a bad trade because we would essentially set our stop limit above VWAP. Let's see what happens here. You also have the 0.5 fib here at 4150. So not a terrible setup, but not an A+ setup either. All right, let me get to your questions. Do you recommend any books for beginner to start trading? Yes. Let me get some books for you. Hold on. I got some books behind me, so I'm going to get those for you. 1 second. Vertical put on NVIDIA. Is this a falling knife? No, it's not a falling knife because we're bouncing. I know you say you are quiet and do a lot of staring at charts. Just a snippet of thought process going through your mind would be great to follow along with you during day trading. That's what I'm giving you, bro. As I said, this is not an A+ setup here if you were going to go short because this wick here is a liquidity wick, right? So we took out sell side liquidity. And as I've stated before, the market intraday is just a series of taking liquidity. So banks take sell side, run it up, take buy side, run it down, take sell side, run it up, etc. Right? It's just a matter of where they are happy taking liquidity. In this case, you know, we did break below this support line, and in general, you want to wait for a retracement back up to address these imbalances before taking it down. Now, it very well could be that we go back up to address this wick here, right, and take local liquidity off of this wick, because a lot of stop limits will be placed here, right? So banks will be looking for liquidity here if they can't find it here. If they find liquidity here, then we can get the move down and hopefully continue back below this trend line eventually. I do think by end of day we will probably get back below this trend line, but we have seen delayed moves before, right? Where negative data comes out and the actual negative move doesn't happen until a day or two later. So we'll see. This is a 5-minute chart, by the way. Any opinion on Ichimoku for trading? Not my style. I'll be honest. Not my style. Will this video be saved? Yes, you can go back and watch it. Do you recommend? Oh, books. Yes, let me go get books for you. 1 second. I have them here. 1 second. I will be right back. Don't jump off. I'm gonna get these books. They're literally right behind me. So 1 second. All right. So this book right here, The Mental Game of Trading, amazing for trading psychology. Okay. And then this book right here, Reading Price Charts by bar by bar. I've talked about this before. This is a dense book. Okay. The reason that I don't particularly think that learning technical analysis or trading from a book is necessarily optimal. But in this case, this isn't really about trading, but it will really dive into the psychology of why you think the way you do. If you are especially if you're a beginner trader or a trader that is struggling to adhere to your strategy, right? But it's not going to tell you a strategy, okay? So it's not going to give you a strategy, a winning strategy. It's going to it's going to tell you what in your psychology or in typical human psychology, why trading is so hard based on that. And then this, I really like this book because it's not really, it doesn't give you a strategy, but it tries to distill for you through, I think Al Brooks has looked at every 5-minute candle on the S&P 500 for 30 years, right? And so it tries to distill for you what each candle means, what breakout gaps mean, what imbalances mean, etc. So both of these books I really like, but you are not going to get a strategy out of them, and you are not going to learn technical analysis from them, right? I personally think that there isn't a better technical analysis process than going on TradingView and starting to chart stuff out yourself. So there you go. Take that for what you will. Looks like Boeing is going to have a $10 day. You know what? I forgot where I saw Boeing. Wow, this is very interesting what's going on here. This all this is liquidity draws. But if we get below this line, once again, I think the next move down is that area that I targeted. And hopefully we can get to 4,100. Let's see. Let's see. What do you think about the Google chart? I don't know. What do you think about the Google chart? Ask me a more specific question, bro. I don't want to waste everybody's time. Ujwal, stop posting that annoying yellow thing. I won't answer your question if you keep posting it. What effect can CPI data have on the Indian market? Oh my God, I don't know. That's beyond my wheelhouse, bro. I don't know. I track only one market. That's what you put the yellow exclamation marks for, to ask me about the Indian market. I'm looking at ES1 on TV, but it is showing 41.28. Yeah, it is showing you that because you don't have real-time data. You have delayed data. You got to pay for real-time data. It's $4 a month. Wow, these wicks are going crazy. Yeah, you got to pay for real-time data. So go into your options or settings or whatever in TradingView and pay for real-time data. Lisa Walton, you are the real deal. Love your content and delivery. Appreciate you, Lisa. Thank you so much. Someone asked me if I would stop out here or if I stopped out. No, I will stop out. I'm waiting for this 50% retracement, and then I will stop out, and I will re-enter once we address some of this liquidity up here. So let's see how we act at this 50% retracement. Okay, so in the 2 minute. We could see an initial rejection. Curious to see what happens here. Do you use Heiken Ashi candles? Not anymore. I used to, I used to use a breakout strategy that I don't use anymore. So not anymore. What is a liquidity draw? Brandon asks. Liquidity is when market makers go searching for liquidity, usually in the form of other people's stop limits. So, if you have, like say for instance, you have, in this case, right? You might have resistance here that a retail trader would draw based off of this, right? Market makers know that their stop limits, they're trying to go short here, retail traders are, and their stop limits are probably up here somewhere. So because market makers want to go short too, they're going to look for liquidity up here. And that's why you see that wick. All right. Yeah. This is the point at the 0.5 that I would stop out at, and then re-enter once it's clear that we've taken buy side up here. All right, guys. We've been on for an hour and a half. I appreciate all of you. Thank you guys so much for joining. I will definitely see a lot of you guys in the academy after this, because I will be doing some live trading with you guys. So I will see you there. You have the CPI numbers. Here they are again, if you haven't seen them. 6.4%, came up 0.2% over estimations. Core CPI up 5.6%, came up 0.1% over estimations. Not a great CPI report. I do think that this is likely where the latest rally will find a halt. I don't think we will really tank until we get a CPI report that's hotter than the previous month. I do think that Jerome Powell will likely pause after the next CPI meeting or the next FOMC meeting. So we'll see. Yeah. So thank you guys for joining. I will see the rest of you in the Academy. If you want access to the Academy, you want access to the mastermind Zoom calls, all the live trades, etc. Link is in the description below. Join us because we will have a mastermind call this weekend. You definitely don't want to miss it. So if you get in time, you will be able to join it. Otherwise, thank you guys so much for joining. Stay safe out there, traders. Peace. Oh, and you can get one of these hats on thetravelingtrader.com. Peace.